Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me at the MarketSite studio, we have Maddie Radner. She's the director on Nasdaq's Market Intelligence Desk. We'll also be bringing in Joyce, managing director on Nasdaq's Market Intelligence Desk, for a technical read on some major markets that we're watching to kick off the year. Maddie, it's great to see you as always. Welcome back to Trade Talks, and I want to get your sense of if value could possibly outperform growth this year. Before we get into that, what were some of the key trends you noticed in 2023 as it relates to that?
Yeah, sure. So thanks for having me back, Jill. In 2023, we saw a surprisingly strong year for the U.S. stock market, despite prolonged inflation and higher yields, especially during the first half of the year. Most notably, smaller caps were the worst performers really up until the last 2 months of the year. During those 2 months, the Russell 2000 was up 24% and the Russell Microcap was up 28%. The end of the year rally we saw was really due to increased confidence of a rate cut cycle in 2024, as well as continued strong economic data. So now that we're in the start of 2024, we are seeing a little bit more of a defensive tone, which makes sense because we are coming off an extremely overbought level. It is a little bit too early to predict where the market's going to go from here. We're kind of in a waiting period, and there are a couple catalysts coming up. One being a ramp up in earnings in the next few weeks, and another a little bit more sector specific, but we are seeing the JP Morgan Healthcare Conference next week. So we typically see a lot of interesting announcements that come out of that, M&A, and a little bit of movement in the healthcare sector following that conference. Other than that, we're really in a macro-driven environment, continued geopolitical uncertainty, and an upcoming election.
Yeah, well, of course, and to your point, 3 trading days is not a market make. So we'll see. I think really, in addition, market participants are going to see if that breadth does, in fact, broaden out. And we're not just looking at the Mag 7, but there are other areas of the market value, of course, that are going to participate. But let's turn to Brian now for an update on the charts. Brian, let's take a look at the Russell 2000. Give us some fresh technical levels to watch there.
Hey, Jill. So the key level here right now is this resistance that's been in place since the middle of 2022. What we're looking at here is the weekly period chart of the Russell 2000, and you can see around 2016 level has been the high since August of 22. We came back to it again in February of last year in 23, and again in the summer in August of 23. So we were able to punch through that in the final 2 weeks of December. And you can see December, however, did finish a little bit on the down note. If we zoom in here, we can see we had a bit of a wider range, and we opened at the midpoint of the range, finished at the bottom, and so we have a pretty nice tail there. So that's a somewhat bearish, concerning price action pattern, and we are seeing downside confirmation today. So given the strong move, as Madeline had just noted, of the prior 2 months, where the Russell 2000 was up over 24%, certainly not unusual to see a brief pause here. So we're now looking at the daily period chart, and I was initially looking at this 20-day moving average in blue right here to act as potential support. Right along just below it is this price gap, and so the bottom of that price gap is right around just below last sale, around 1950, where last sale 1963. So near term, I would look for that as potential support. If we are going to see a deeper correction from here, then maybe what we could see as potential next support levels is either this pivot over here, which is a minor pivot from the 1926 level, and then potentially this rising the rising 50-day moving average, which is down at 1840. So that is a fair bit down from last sale in percentage terms. It is just crossing over the 200-day moving average. So there's your golden cross. It's certainly not a rule that is to always cementing a significant low in the marketplace. We saw a golden cross back in July of 23, and that was only a temporary positive signal. But certainly, I think the price action, what to me is most noteworthy, and Madeline and I were looking at these numbers just a little while ago, is that right here in mid-December, the price difference between the index and the 50-day moving average was over 14.3%. And there's a fairly good sample of the amount of times going back to 1978, which is 45 years, when that took place. It's almost 50 times. I think the exact number is 46. And 43 of those times were really taking place. 40 to 43 times took place at significant market lows. We're talking early 1982, early 1991, talking 2003, 2009, and May and June of 2020. So in about 40 of those 46 occurrences where we saw similar, wide margins between price and the 50-day moving average, About 88% of those times, it represented significant market lows where we saw, in a lot of cases, multi-year uptrends following. So, we'll see if this time, that rings true again. Only time will tell. But I think it's a good signal. So when you hear people talking about overbought conditions, certainly in the near term, that is the case. We are overbought, but in the longer intermediate to longer term time frame, potentially a very bullish signal right here.
What about if you isolate growth versus value?
So, we've seen some violent swings in the relative performance in just in the last 4 years between growth and value. So in 2020, growth outperformed value at the large cap level by more than 35 percentage points. And that's what we're seeing right here on this significant uptrend in the charts here. So let me draw an arrow. This move right here, capturing 2020, up about 35 percentage points outperformance. And then we had a year of sideways activity. And then in 2022, we had the opposite where growth grossly underperformed value. It was the second biggest underperformance versus value going back again to 1978. Only 2000 did value outperform growth by by a greater percentage. In 22, it was 21 percentage points. In 2000, it was about
right. And to Maddie's point earlier, the key focus for 2024, for certainly for Maddie and for all the strategists on the street, is going to be what happens from the macro perspective, particularly with interest rates. Let's pull up the chart here with interest rates in the U.S. dollar.
So with rates and the dollar here, we're looking at now the 10-year index. Let me zoom out to my weekly period chart. So we can see we did find some bottoming patterns here in the last 2 weeks of the year, and then we're moving higher. Start this first week. So around 4% level coming off of around 380. So a significant move lower from the top. So right now I want to look for potential resistance levels on this rebound. We're just above the 20-day average. We have the 200-day just above us here at 403%. And then if we can get through there, then maybe we can push back up to 4.34%, which we could see was the high from October of 2022 and also proved to be a level of resistance back in August of 23 for about 5 or 6 weeks. So if we can get above this 200-day average around 403%, potentially looking at a retest of 433 in that area, which also coincides with the 50-day moving average. Also keep an eye on the US dollar, which is bottoming off of this 101.30 level, which had been support on numerous occasions going back to June of 2022. We had a 1-week breakdown below it in the summer of last year in July, but we shot right back above it. So this is where we found support again on this recent downtrend. If you have a bull mindset for the equity market, you do want to see the dollar begin to start rolling over here and break down below this support. If it does, I think that would bode well for equities.
All right, Brian, appreciate the technical insight as always. And Maddie, to wrap up here, you cover small caps on the value and growth side on the desk. Are there any specific sectors or themes that you think are going to work, whether it's value or growth?
Yes. So what really stood out to me in 2023 is small caps in both the value and growth space really bounced back. So value was most likely coming out of financials, some of our regional banks who had a rough start to the year and are going to do a little bit better and benefit from lower rates. Growth was most likely coming from some of our biotech names who, same thing, will really benefit from a lower rate environment, especially as they're coming up on some refinancing dates. So I think that will continue moving forward. We'll continue to see some investors circling into value-related stocks.
All right, you'll be busy next week at the conference out of San Francisco looking for some tidbits. Appreciate the insight as always. Thanks for joining us on Trade Talks. And thanks for joining me from the MarketSite studio. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.